Welcome to the podcast, Marwan.
Nice, thank you. Nice having me. Thanks for having me.
Okay, so I'd like to get this thing started by giving some background. And I know this is not your first rodeo, so why don't you give the listeners a little bit of background about what you did before Veem?
Thank you. Yeah, I started Veem back in 2014. I used to run e-commerce for Western Union. I got into Western Union through an acquisition of a company called eBillme, which I founded and sold to them. And then prior to that, I was in another startup that ended up with Nokia. So I spent my career back and forth between startups and very large companies.
And now you're back in a startup again.
Yeah, you know, it's addictive, I guess.
Right, right. So then maybe let's just take a step back and talk about Veem and how do you describe it? What do you guys do?
We make it really simple for businesses to pay and get paid around the world. It's a wire replacement service. Simplest way to describe it is like Venmo for businesses globally. So, for example, you're in California, you want to send money to a company in China. You log in. All you need to do is enter the email address of the receiver in China, the amount of money you owe, and that's it. The receiver gets a message, hey, you're getting paid. This is the US dollar amount, shows you the local currency. When you accept the payment, we pick up money from one country, deposit money in another country.
And
We do this
they have to link their bank account, I imagine, right, to get that money.
yeah.
Yeah.
You link up your bank account on both ends, on the sending side and the receiving side.
Right.
And essentially, we do this in 110 countries, 50 plus currencies. We have about 200,000 businesses that signed up to use Veem.
Okay. So, and you say it's a wire replacement. Then what? I mean, pretty much there's a huge variety of companies that would use wires. What? And so, is your target market like just anybody who sends anything internationally? Is that? I mean, who is
And
your target?
domestically. And actually, domestically, I mean, we have quite a lot of customers that use us in the US to move money from California to New York, for example. But instead of using, check or bank wire, they use us because it's a lot simpler than wire.
Right.
So the type of use cases customers have, they use us to pay suppliers. They use us to pay labor, like contractor payments. They use us to move money between their own bank accounts. And sometimes they use us to collect money from buyers that they have around the world. That's the various use cases we've seen with Veem.
Okay, so that's you said you got 200,000 businesses. I can see that you could scale that. You look at Venmo, PayPal. I mean, PayPal has like, I don't know, a couple 100 million businesses, I think, or a couple of not businesses, a couple 100 million users.
Accounts,
yes. So you've certainly got a lot of runway. I imagine that that you can do it. So so I'm curious about the fact that we've had this sudden economic downturn. Has this really impacted you guys as well? Because we've got there's just less commerce happening. Obviously, less international commerce as well. So how have you been impacted the last few weeks?
The business has had amazing performance for the past 3 months during COVID. On all measures, really, accounts, revenue, volume. And I would describe it as follows. COVID created two different worlds. One world is doing quite well, and the other is struggling, and it's going to take some time for it to recover.
Right.
And it all boils down to the formula itself, like 6 feet apart. And so if you're required of anything that requires physical exchanges of goods or services, that world is going to take some time.
Right.
And so that's like physical retail and travel and all the things where you really depend on people next to each other to exchange the goods or the service. My world, I have a lot of e-commerce merchants, a lot of online businesses, a lot of supply chain. And that world benefited actually from the disruption because the sales shifted online. And so what happens is that their business is picked up, and we benefited from that. So again, it depends on what segment you're in, but e-commerce has done phenomenally well this past past quarter. And I'm not alone. I mean, PayPal had the same guidance to the street. Adyen, Shopify, Amazon. I mean, look at all these businesses. They're all on the high end at the moment with the public markets. So that's a broader phenomenon that's going on.
Right. Okay. And so that's really interesting. Then you've got, and I imagine that. I mean, I'd love to sort of talk about the interface and how, because I mean, obviously everyone's got their accounting system. Most of these small businesses are going to have, QuickBooks or NetSuite or Xero or something like that. How does it actually work? Do you have can you do this from inside these accounting suites, or do you need to go out to Veem and does it interface? So tell us how the tech works.
Yeah, so we're plugged into various accounting packages, QuickBooks, Xero, and NetSuite. We're plugged into Magento, to Zapier, other systems as well. So we've always had this belief that we should go to you and live in the context of the environment that you work with,
right,
as opposed to the other way around. And so, for example, if you're within NetSuite and you have a bill that you need to pay, the bill shows up, Veem is a button on the bill. You essentially connect Veem as one of the applications to your environment. And so you click on it, and we take the data from NetSuite, we pass it to Veem through the API, and then we send the payment out to the recipient. So that's an example of a model where you do it from the context you're in, from the environment you're in.
Right.
Within NetSuite, when the bill shows up, you do it on that bill. And then the nice thing about that model is when the payment is completed, all the status of the transaction is reported back to NetSuite. So it closes it out for you. So instead of manually marking it, that this transaction has been paid or this invoice has been completed, you can synchronize it. Just the data is coming back to Veem, we send it back to NetSuite.
Right.
That's an example of how it all works. Make sense?
Yeah. So we have to send the occasional international payments, and what we've been using is Transferwise. So maybe why are you guys better? What's different between Veem and Transferwise?
Yeah. So Transferwise tends to be more consumer than business. We tailor more to the business environment. And business environments require integrations into accounting systems, payment approvals, account approvals. You have accountants managing different accounts. So the entire software allows for that configuration to happen. You can do single transactions. You can do mass, where you upload a file and it sends it to a whole bunch of customers. And then also, the way Veem works, we have both the sender and the receiver. So what happens, basically, you can use the system to either send or request money. It's bi-directional.
Right.
So Transferwise is a remittance model where you send money. There's no request capability. So, I mean, there is, but it's not a model where you have the receiver on that platform that's invoicing or requesting. It's mainly send.
Right.
So these are all examples of differences between the Transferwise system and the Veem system. Our model is also dependent on an email. That's all you need to send money. Their model is a bit heavier on the user experience, in that you need to get the receiver's bank account information and bank details before you send money out.
Yeah, got it. And I know when we chatted recently, you were talking about how, you have a two-sided marketplace, and a lot of these customers have one-sided marketplace.
Yep.
And because I imagine when someone sends a payment to another company, you suddenly get the possibility of having this company, or that they're going to have to actually, to accept the money, they have to at least create an account, right? So you suddenly have a new user you can market to. Is that kind of how you've grown the business?
Yes, that is correct, and that's because there's also value to the receiver. So one of the things that happens in bankwire world is when you send the money, first of all, you as the sender have to get a whole bunch of information on the receiver, the receiver's name and address, business name and address, currency pair, SWIFT code, intermediary bank account. Then you have to do it before cutoff time. And then when you send the payment, you really don't know what happens to that payment until the receiver tells you, hey, I got your money. And then it's equally painful to the receiver because the receiver doesn't know when they're going to get paid. So what happens is they gotta go check the bank account all the time to make sure that there's money. And when the money shows up in the bank account, they really don't know sometimes what's going to happen. Like, how do I take that money and figure out which money belongs to what invoice? Because the statement details when the money is deposited in the bank, there isn't that much information given to you that this money belongs to that invoice. And so what we do with Veem is we add benefit to the receiver. So the receiver then is able to track the transaction. So they see money coming to them, they watch it come to them. And then we also give them preferential pricing on foreign exchange. And then they can reconcile it so that they know what money belongs to what invoice. And then they got the data and the payment together. So when you receive the payment, you're receiving the payment along with the details of the payment, invoice, contract, whatever it is that needs to be passed from the sender to the receiver.
Mm-hmm.
Because generally, when you're doing bank wire, you have three different systems that are siloed. You have the information, the data itself, the invoice that goes back and forth between sender and receiver on email, or other systems. There's the payment itself that happens on banks, and there's the accounting systems where you pull things and reconcile them.
Right.
So what we're doing here is we're marrying these three things together so that you can originate from your accounting system. The payment and the data come together, they go together, the receiver picks it up, they know which payment belonged to what invoice. They're able to track the transaction and get better exchange rates.
Right. Got it. And so you're talking businesses here. So, I mean, a lot of businesses send very large payments around. I mean, given the fact that you're a completely, online play, how much can you go up to, and what's sort of a typical transaction size?
Typical transaction is wire replacement. So it's somewhere between, 5,000 to 10,000 is the bulk of the payments.
Right.
We've handled transactions as low as like $500 or sometimes $100 for like expense payments or commissions. And we've handled transactions that are very large, like, a few million, 5 million, 6 million,
right.
that are, for container payments, for large shipments. So, it varies quite a bit. There isn't a limit, but what happens is the bigger the amount, the more KYC and KYB required.
Right. Understood. Yeah. So you don't just do payments, though. I noticed that you also have a working capital product, for loans. So tell us, why did you create that product, and tell us a little bit about it.
Yeah. So one of the things that we noticed when we were talking to customers is that working capital is a pain point to them, because that's another siloed process. Because
Right.
generally they have payments somewhere, and then they go apply for working capital lines or credit lines somewhere else, generally with lenders or banks. And then a good chunk of that data required to approve a loan is actually payment data and KYC data, which we already got on you. So what we're trying to do is basically take your KYC history on Veem, your payment history, and essentially automate underwriting decisions, but in the context of the transaction. So for example, if I have an invoice that I need to pay, I can have the example of that. I have the invoice, it's $10,000. I can either pay it now in full, or I can pay it in 6 monthly installments. Essentially what we do is we take that data, we pass it to partners, they underwrite it, and then essentially you get to pay in installments.
Right.
The flip side of that, for example, another use case, when the invoice is created, you can also have the invoice paid on the spot, which is a factoring type product.
Right.
And then we can have the lender underwrite it. So our role is, in our case, we're handling the customer. We have the customers on the platform, and we work with partners to underwrite. We originate essentially the loans to the various parties we work with.
Right, right. And is this, I mean, obviously, this is the lending business is a monstrously big market. I mean, is this something that you're really focusing on your existing customers? It sounds like. Is this something that you're going to scale up at some point?
We think of it more like payments is a really good way to establish a relationship with the business, with the customer, and you accomplish the most important task, which is earning their trust. Because
Right,
once you move their money, they basically trust you. And with that, then we start providing them other things that can benefit them. It only makes sense when the data and the payments are all integrated together.
right,
So that helps you do something with Veem that you cannot do somewhere else. Or if you do it somewhere else, you do it, but there's friction with it.
right,
So we're not necessarily like going into lending on our own. We're more like upselling
right,
to accounts that have a payment relationship with Veem. And we're basically using that data to help you with lending decisions.
right.
So a good example of that, or a good analogy, would be Square. Square started with Square Payments.
Yep.
Then they added cars, they added capital, and capital is it's a good chunky business for Square. So that's a good example or a good analogy.
Right, right, got it. And I'm on your website on my other screen here, and I also notice you've got a big your Paycheck Protection Program offering here. So tell us a little bit about that. What I wouldn't have thought logically you guys would be heavily involved in that, but tell us about why you created that program.
So at the beginning of COVID, we started talking to customers, and they were asking us more questions about the Veem Capital product because there was a big jump in lending needs because of the market.
Right,
Except that a lot of the lenders started having issues because of the market, and so at the same time, the SBA started the program with the PPP project. And what's interesting about that whole setting, what's required for PPP was basically authentication of accounts. So you got KYC and KYB the customer. You got to collect data to pass to SBA, and you got to essentially manage a workflow. So interesting enough, that's what we do with payments. So we take KYC and KYB history on you to get you to use the system to pay. That's what we have to KYC you. And then we're managing a workflow to pay or request a payment. It's actually a workflow. And we're very used to collecting documents from you to then essentially use that data to process the payments. So it was not necessarily a big, procedure that required a very different set of expertise to go, do a PPP program. So what we ended up doing is we essentially took the initial data from the customer and passed it to the banks, and the bank was actually the one underwriting and managing the interactions with SBA. So just to be clear, we're not the lender.
right,
We're
right.
simply like an agent that passed the information to the partners, and then they underwrite the loan.
Yeah, I think I read somewhere. I think Cross River Bank was one of the banks you guys are working with, right? Was that the primary one you work with, or do you have a whole range of them?
That was the primary. We had other ones, but Cross River was the main one we worked with for the PPP program.
Right, right. I know I'm actually going to get those guys on the show here in a little bit.
Yep.
They've done an amazing job with so many people for the PPP.
Yep.
Okay, so then I want to talk a little. We started talking about the technology, but we didn't. I wanted to, when I know that you use, this is a blockchain-based system, right? Or often cryptocurrency type. The core of what you guys are doing is based on that. So maybe, no, you don't mention it. I mean, there's one little link to blockchain on your website. I can't find it pretty much anywhere else. So tell us about. You've been around for a long time. Obviously post Bitcoin, but still, tell us a little bit about your kind of experience with blockchain.
Yeah, so we're quite versed in blockchain matters and crypto matters. We've been using that technology since we started, since 2015. Um, we used it to do a synthetic cross from one currency to another. So the way the system works, essentially, for every transaction, there's a router that routes between different rails. We call that multi-rail. And so we have 5 different methods of moving money from point A to point B. We have our own bank accounts, which is the default method. We use cards. We can move money to real time to an account associated with your debit card. We work with third-party payment providers. We have blockchain, and we have Swift as well for very large transactions on long-tail currencies. So in the context of blockchain, we basically scan the various cryptos and figure out which one is the best to work with, which ends up being like the bulk of it is Bitcoin. That's where the volume is. So what we do is we go from US dollar to Bitcoin to pesos, for example. I'm using if I'm sending money to Mexico, that's what ends up happening. So Bitcoin becomes a way to cross from US dollar to pesos. Now, we don't really watch the Bitcoin price and we don't carry inventory. We go in and out.
Right.
And we do it so that regardless of what the price of the currency, we use it as a transportation mechanism to take US dollar and convert it into pesos on the other end. The system is agnostic to all the rails, and actually the system is agnostic to any of the cryptos. It simply scans for whoever has the most volume and just picks it up. In practice, like the bulk of the volume is on Bitcoin, so that's what ends up happening.
So does that mean the bulk of the payments you're processing internationally goes through Bitcoin?
No. So the Bitcoin is one of the, like crypto is one of the rails. We have 5 different ones.
Okay.
So within crypto, the bulk of it is like, I mean, not like all of it is Bitcoin. So it crosses on Bitcoin. Just to be clear, I'm not holding
Yeah,
coins.
I realize that. Yeah.
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 So
So when you say you're agnostic on the channel to actually transmit this money,
yeah.
what's the deciding factor? Is it just purely a cost play that what's the cheapest
No,
way to get there?
it's so the inputs to the model is basically the size of the transaction, currency pair, country pair, and then when do you need it by? Like what time do you want the transaction to land on the receiving end?
Right.
And so it goes from anywhere from real time to same day to next day, and sometimes depending on the country, if it's really long tail, can go longer. So it sort of, these are the inputs. Now, what you get from crypto that's different than others, in that the transactions I can cross from, once I have US dollar and I want to convert to pesos, that cross is basically near real time because I'm going in and out. And the other thing is, because it happens on the blockchain, I can track the payment. I can Google map my payment. Again, I know exactly where the payment is at. And then also, there's no banking hours. You can do transactions in the middle of the night. And you can tell the customer, like, hey, your money is in the country when the bank's open, you can have it. At least the customer knows. And so it derives benefits that are different than what you typically get from the other systems.
Right. Okay, that makes sense.
And we don't, and just to be, just to answer your question though, we used to have it more prominent on our communication, except that when we were dealing with customers, like one thing that we learned doing this is like customers don't really care about payments. They
Right.
just want
They just
to
want the
get
money.
yeah, they just want to ship their t-shirts or boxes or whatever they're doing. That's fundamentally what they want. The last thing on their mind is actually how payments work.
Right.
And so we kind of simplified the communication to basically explain how we send the payment, when do you need it by, versus the mechanics of actually how it moves.
Right. Okay. So then, what's your business model? How are you making money?
So we make money a variety of ways. So foreign exchange is one of them. When you cross currencies from US dollar to euro to pound to RMB, we make money on foreign exchange. We also make money on fees for domestic payments and for payments that originate in US dollar and stay in US dollar internationally. So same currency transactions. So that domestically is $1 per transaction, and cross-border USD is $20 per transaction. We also make money origination fees to lending partners for bringing transactions where the customer wants to underwrite their their invoices. So we make money that way.
Right. Okay. So basically, if I'm sending money out of the country, I'm paying $20. If I'm sending money inside the country, it's $1.
If you're sending money internationally, it's free. The receiver decides which way to take the money. If they decide to keep it in US dollar, we charge the receiver $20. And if they choose to take it in local currency, there's no extra charge. That's it. So the sender, unless you're sending domestically, the sender is free all the time.
Right. Got it. Okay. Thank you for the clarification. So Matt, can you give us a sense of what scale you're at? I mean, how many transactions you're doing a day, or just give us some sense on the scale.
We have about just over 200,000 businesses. It doubles pretty much like every year. The system doubles in size. So that gives you an idea of the scale of it. And a good chunk of the reason why it doubles because the way it propagates, because every time there's a sender, there's also a receiver. And so sometimes the sender becomes a receiver and the receiver becomes a sender. So on its own, actually, it does propagate. And so roughly every 12 months, the number of accounts double in size.
Right. Okay. And are you like, do you have how do you market then? Are you really relying on this sort of network effect to grow, or do you have really targeted marketing programs you're running?
So, a good chunk of the accounts come from the network, from our customers. Like that's actually the majority of the accounts. Then there's the new ones tend to be online is the biggest channel. We get them through the web. We have a sales team as well for the larger accounts. And we get a bunch of accounts from partners, QuickBooks, Xero, NetSuite, like from the various partnership channels. But probably the majority of the accounts come from customers that are happy using the system, that introduce it to other customers, who then themselves like it and bring it forward to other customers. That's the larger portion of how the system grows.
Right. And to be clear, it's a it's a web-based system, right? You like there's no is there a Veem app, or is it all just web-based?
It's web-based, but it's adaptive to mobile phones. So the language that we write in, all the screens are adaptable to whatever device you have. It's not a native app where you download it,
right?
But it has a pretty optimized experience to your mobile phone.
Right. Okay. So then, so last question then, what I mean, it's really, you've got a really interesting company here, and obviously you can, this could become the potential is massive, but what's, when you look say the next 12 months, I mean, what are you focused on?
So we're looking at more countries, more currencies, more integrations. Customers love integrations. So like all the work we're doing with QuickBooks and Xero, we have a list of packages that customers want us to integrate into. We're definitely interested in partnerships in general, not only to distribute the product, but also to add value to the experience. So lending in particular is of interest to us. We have a particular view that payments and lending are tight; they need each other.
Yep.
So in general, when you're servicing the customer, the next thing that they need after payments is lending, and when they go to ask for any of the lending products, you need payments as a history, so that whether you can actually underwrite or not, because that's where you get the historical value of the account. And so these products are tied together, and so we are definitely interested in working with partners to figure out how do we best optimize that experience to the user.
Right. Okay. Well, best of luck, Marwan. It's been fascinating chatting with you today. Thanks for coming on the show.
Thank you for having me.
Okay. My pleasure.